Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on gold exploration and development today. We will hear from Kim Tyler, President and CEO of Stratabound Minerals, Corp. During today's webinar, he will provide an overview and outlook, and then we will take questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Stratabound webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Stratabound corporate presentation. That can be found on the company's website, stratabound.com, and I believe also stratabound.ca. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Stratabound. After a transformative acquisition in 2021, Stratabound is now primarily focused on its flagship Fremont Gold Project, located in the historical Mother Lode gold mining region of California. This project hosts a historic mine and an updated resource, now with over 3 million ounces of gold. And Stratabound is poised to advance the project toward production. The company also has some interesting exploration stage projects in the Yukon and Eastern Canada. With that, I now turn it over to Kim to update our audience on the company.
Thank you, Tim. Thanks, Red Cloud, for allowing us to present today. And we'll hit our forward-looking statement next. And Tim already gave you a good discussion on that. So jumping right to it, quickly said here that this slide speaks to everything Stratabound, most everything that Stratabound is, and he's repeating again a bit. About a year and a half ago, we made an acquisition. We had 0 ounces, and 43,101 ounces on the books a year ago. We were an early stage exploration company with 2 projects, and on the right-hand side of the screen, you see those. One's in McIntyre, Brook in New Brunswick, and the other one's Golden Culvert in the Yukon. 2 very good jurisdictions. 2 we especially excited about. A new, fresh everywhere is Northern New Brunswick. Looks very much similar to the geology you'd find Newfound Gold is finding in eastern Newfoundland. But more concern to us, we were sitting there around a 12 million market cap company at that point until a year and a half ago, August 2021. And we knew we're operators. Our background is mining and operations and building mines and putting in production successfully sometimes, and seeing things go wrong as well, more importantly, and closing them down, and reclamation and doing it over and over again. So we knew we wanted to be in the $100 to $80 million market capitalized companies. And to do that, we needed a minimum of 1 million ounces. That's where the peers exist that are sitting in that range. And that's what we do anyway. We're operators, and we like to take project brownfields and so on, bring them to production. So we made this acquisition through Red Cloud's was selling California Gold Mining Inc. We had a project in California. It had a resource already on it, and it was in financial distress. And we bid on it, and Stratabound was out of 42 bidders with a successful bidder that acquired it and put it into our company. And immediately we had not quite 1 million ounces. A year later, we just announced in August updated resource estimate of about 1.16 million ounces indicated, about 1.9 grams per ton, and 2 million ounces inferred. So now we're at 3 million ounces indicated plus inferred, and our market cap. And here's the opportunity we're going to talk to in the next few slides for any investors out there. If you think gold is going to be around for a while as a underpinning currencies, and it's still a strong thing, and we still need to find deposits that have gold in it, you think we got the company that can get there. Well, our market cap went from 12 million a year and a half ago. We're trading at 7 million now. We're trading about under $3 market cap per ounce, which is absolutely ludicrous. It's the market, it's the fact we've moved very fast, and it's the fact that no eyes have been on us. The market just hasn't been interested in the last several months while we've been doing this. It doesn't deter us. We've been through this before, and we intend on building a mining company. This slide talks to our accomplishments and how we've hit our milestones. I like to say that we've been winning all the games in the ballpark. We've been hitting balls over the fence. We've been scoring the touchdowns. But the fact is, nobody's going to the games at all. Period. And we think that's going to turn around mining and exploration being cyclical, such as it is. So here we go. Back in 2020, gold shoots up at this point, nearly $2,000 an ounce for a while, actually. But gold prices really haven't altered too much. We're back around 1,800 today. And everybody's boat lifted in this period in 2020, if you recall. We shot up to 30 cents a share, and market cap was around 25 million on the strength of nothing more than we were doing exploration in the Yukon, pretty much. And at that time, around that time we acquired our McIntyre, Brook, and New Brunswick. We move along. We make the acquisition of Fremont through California Gold in August 21, and we see ourselves getting punished for that exercise. And then further on, we announced an updated resource at that time, nearly 1 million ounces, and drifts down again. We do a financing a year ago, which shoots us right on through. And then we'd updated resource estimate here. And we see a little uptick, but then drifting back down. Today, we're trading around 4.5 cents a share. And our market cap's around 7 million. So the news going out is that sometime, hopefully in the Q1, I'm hoping January, working on it right now, is that we're doing our very first preliminary economic assessment on it. We've got consultants working on there. We're about 95% complete on that, on coming up with what are the economics of this thing. And then people like Tim here, the analysts, can actually value our company. Without that, we've got a resource, but it's hard to value a company and make recommendations. But anybody should be who's fairly astute in the gold juniors and gold mining companies should be able to take that and say, what's this company actually worth? And by gosh, they're way undervalued. The sector's super undervalued, and this company's way undervalued, and they've done everything right, and they're continuing, despite all the market trying to fight upstream with it, they're continuing to make their mark everywhere they go. And this third slide hits to it again. Where do we sit amongst our peers? Well, if we just had one property in the Maritimes, which we do have two, and if that's all we had, we compare ourselves everything into the upper right corner, all those red companies, and that's where their market caps sit. And we've heard of Sokoman, Labrador Gold is involved out with inclusive Newfound Gold. And I'll comment, Newfound Gold isn't on there, but it's Newfound Gold is such an anomaly. It didn't exist a couple of years ago. I was out in New Brunswick and Newfoundland looking at that area at projects in 2016, and Newfound Gold didn't exist back then. I had prospectors showing me samples with gobs of gold in it and couldn't get anybody interested back then. So here's what they do. They come in to an old camp, and they've done a wonder. It's $1 billion market cap company. Eric Sprott's heavily invested, all kinds of excitement, right where gold should be and where people haven't been looking for a very long time. We've got a similar project in New Brunswick, similar geology, and we're not even comparable to these guys in terms of market cap and also shares outstanding. We got fully diluted 203 million shares. We're comparable to those. In the lower right corner, you see we have a project in Yukon, very similar to Snowline Gold. Snowline Gold is a darling. It trades on the over the counter in the States. Doesn't even trade in the Canadian exchange. They're $200 million market cap, and they've got a nice project in Yukon. We're on strike. We got a nice project there too, but they're getting a lot of love in the market, and we're still struggling to get that attention. And finally, over on the left side of the screen are comparables. If we had none of these other companies, by the way, has any resources on the books. They're all explorers. They got one or two assets, and they're doing exceptionally well in the market. We do too, but we're not at the moment. And on the left-hand side, we see that other companies that are working down in the States, as we do, have resources, as we do, either near production. And some of them were bought out, understandably, but that's where they were bought out at hundreds. So we're just the big story here is where should we be? We expected to be in these market caps of these other companies. We should have been re-rated. We did all our work, and it sounds like me crying the blues. It's just the market, and we'll punch through. We're determined to get there, and we should see that 7 million market cap jump up to where these other ones with time and attention. And more talks on with Red Cloud and webinars. Perhaps there's interest out there. Finally, so that's it for where we sit. And final comment on that is we are a very good bargain right now if you're out looking for a project and you like what we're doing and you like the team and you like what you hear today. So why California? Why did we focus on that? I've been in the business over 40 years. Started off, I live in Sudbury, Ontario. I started working in the mines at 18. It paid my way through university. So I've been in mining a long time. So is the rest of the team. A lot of good, strong mining people. And we jumped in because we could be retired, but we said we want to get involved in a mining project, having taken all the experience and good things we learned from the better people we've known all our career and build something. I liked California for a lot of reasons. I worked a lot of the time in the Abitibi in Timmins, Ontario, 15 years as a chief mine geologist at the Pamour mine. And I see projects, to me, the west coast of the U.S. is a lot like the Abitibi in terms of how much gold's been produced, and similar in terms of endowment for gold. California in particular is very famous for the 1849 gold rush. Over 100 million ounces of gold produced. Half of that's been Lode gold from deposits, and the other half from placer mining. All the mining stopped in 1944. The U.S. was involved in engaged in the war, and a law came out that any gold mining had to stop, and all the miners had to be involved in anything that produced bullets, tanks, rifles, and so on, base metals, and that's where it went. And the gold mining never really reopened. A lot of opportunities running through California and the West Coast up through into Washington State, and all you can say the whole West Coast of North and South America have gold deposits for the Cordillera that runs along the backbone up and down. That's a simple story there. We own 3,300 acres of private land in Mariposa County. It's in the sort of western foothills area of California, very rural and remote. It's private land as opposed to BLM or Bureau of Land Management, as opposed to federal land. We're not on there. In Canada, we would say we are a patented land or privately owned land as well, as opposed to Crown land, which has different regs and different difficulties of moving forward. When you own private land, you own the mineral rights, you own the surface rights, and you own the groundwater rights. So three things that are important that we would want to have and not have to go through a lot of hoops to get there. We have a highway right through the property. Here's where I'm going to try you see in this diagram down through here, you see the highway. There we go. Turn it on. You can see the highway running right down. It's off again. Sorry, this isn't working. Okay, and in the picture in the lower right corner, you see our site. You can also see a number of things, a power station, electrical substation right on the property. This is our building. We're facing, standing on the deposit, looking out to the west towards San Francisco, which is about a 2.5-hour drive. Nobody's out here. We have no neighbors. It's very rural, isolated. There's no neighbors around us. That happens to be Bureau of Land Management land out there. We own ours privately. We have a large reservoir of water on the property, the old mine workings on the property, two shafts, multiple adits, and underground workings that go down for 800 meters. We calculate about 40 billion liters of water sit in the groundwater. Old mines make great reservoirs, and that's one of our pitches in terms of ESG and sustainability and what happens after the mining's done. When the mine is done, these are great man-made reservoirs. You don't have to dam up a river and destroy lots of ecosystem because there's nothing living underground that deep. So again, one of these things we see at the end of the day is that we'll have providing water for the local people once the mining is done. All these workings that were done underground, the shafts and so on, that's about $100 to $200 million of infrastructure that's already exists. It would need some rehabilitation. But to do that fresh today in a new deposit, you'd be spending an awful lot of money just getting it going. That's a lot of money we don't have to spend in terms of capital to get the project going. And finally, another box that ticked off for us, we liked a lot of very good work was done by Wright engineers in the late 80s on a feasibility study based on 425 US an ounce. Plus they completed a draft environmental impact report completed for permit was done in 1986 as well. So these are templates for us to work off of. They have to be updated, but I'll consider a lot of very excellent work. Wright Engineers is a famous name. All this work is pre-NI 43-101. And as I said earlier, our next milestone to watch out is a publish of a preliminary PEA, preliminary economic assessment that we'll be publishing in the first, hopefully in January of 2023, where we hope to have very, very good results that would support analysts again looking at seeing where we're going with it. This diagram is a long section. You see the surface dashed on the top, and we're looking at diamond drill holes through the side. And the resource that we published lately, the 1 million ounces of indicated and 2 million ounces of inferred are inside that blue dashed outline. That's only 1 kilometer strike length. In that diagram as well, you see all the diamond drilling that's in reverse circulation drilling that's been done after the mining was completed. And in gray shades are the underground openings that were mined in the past. So we still, that old underground work at $35 an ounce in 1944 when the mines closed down, they had to mine high grade gold, and they did. They mined about a third of an ounce at that time, and that's consistent with that kind of a cost for any mines in Timmins or wherever you might be. But a lot of low grade was left behind. And in fact, a lot of high grade was left behind too. They never shut the mine down because they ran out of gold. They shut it down because they were going to war. That was the big reason. And that's the opportunity throughout the whole Western US. We see great opportunity down there to be looking for more opportunities like this. Wherever we've drilled to the north and south, you see Chicken Gulch. You see results in there of 2.3 grams over 6 meters and 2 grams over 27 meters. These are the same kind of grades that you see in the main deposit. The issue is with those, the drilling isn't dense enough to create calculated resource estimate. We have calculated one in the Queen specimen on the far north side. That's part of our new resource estimate as well. But the point is that everywhere we explore and drill on this property, you get gold. You don't get drill holes that are duds. Every drill hole gets results of gold in it to some form or fashion. So the opportunity here is taking that resource estimate we do have, 1 million ounces of indicated, 2 million inferred, and we see multiples of that. We got a kilometer covered out of 4, and in that 3 that we haven't got a resource on, we're getting gold too. So down the road, as we grow, we see the opportunity for being very much larger resource than what we have. Right at the moment, what we have is sufficient for us to work through an economic evaluation and see if we can get this thing into production as quickly as possible. The point of that, again, is illustrated in this slide. You see this is a soil anomaly work. This is grassroots exploration work. It was done by the previous owner. They never got around to publishing it. They never even got around to plotting it up on a map and seeing what they had. But to me, it was extraordinary. We published this news in the last couple of months ago, and it shows that on surface, the gold is the earlier slides. So wherever you drill it, you find gold. But in this case, it shows very continuous mineralization on surface. The dashed blue in the center where it says Pine Tree Josephine, that little arrow, that's the 3 million indicated plus inferred resource estimate sitting in that blue dashed area there. The rest, you can see all that color takes you out to the property limits to the north and the south. And the purple outline in there is 300 parts per billion gold. That's a technical thing. What does that mean? That means 0.3 grams per ton. That's the kind of a grade that would be sufficient for heap leach. That's done all over Nevada and in the States, and even in the Yukon, Victoria Gold's mining heap leach up there as well, or vat leach, the same sort of thing. So that it's oxidized ore that is near surface and readily accessible that we can go after, and that's the point. It's very high for soil anomalies to be that high grade is unusual in most places, and this is very high grade and very continuous on surface. So that's the end of the story I have for California, and of course we can talk. Anybody's got some questions can come in at the end and ask more about it. Well, I'll go back one comment, and that's the one thing I guess I want to address right away. When we talk California, and I think this is the ace in the hand that we've got. The one pushback people get, and even I was concerned about it in the past, getting permitting done in California. The old saw is that, oh, you won't get a mine permitted there, and it's very difficult. And that's not true in California. Their rules are as stringent as they are anywhere on the planet. What I do like about California in terms of permitting is that you talk to the county. The county seat makes the decision. City councilors, basically, there's 5 of them in Mariposa County. They have to vote a majority. Once you've done the state and the feds provide the regulations, but who leads it and makes the decision on it is ultimately the county. So that would be like going to the city of Sudbury in Canada or Timmins and asking the city council to get a mining permit. Provided that what we provided them fits all the rules they have to abide by in their own, that would be federal or provincial. So that's different. In Canada, we're dealing with a much more politicized environment, getting much more difficult to permit. And that's why I wanted to go to California. There's a lot of mining already in California, not so much gold mining. Equinox operates 2 gold mines in California already. So, heap leach, the same sort of thing we're talking about to start with anyway. So that we see this as an opportunity that other companies are shy to step in here, and we feel that's excellent. You stay out because there's lots of gold deposit. We want to do this right. I talked about leaving something sustainable when we're done, working with the community at the end of the day, because we wanted to be invited into the next community in California to build the next operation after this one. So you just want to go in, do things right, learn all the lessons that need to be learned, and work together with the community and build forward. Again, you might see the ring of fire. It's been 20 some odd years working on that one, trying to get it permitted. It might be another 20. It's a very rich deposit, and Ontario is a very mining friendly province, so to speak. We think anyway, but it's extremely difficult to get something new permitted in my home country of Canada. So that's why we're down here looking here. The gold is there. A lot of rich gold deposits, a lot of rich gold history, And the permitting, we think, is actually an ace in the hole for us. So that's it for California. I'll entertain questions later. This is New Brunswick, and why are we so interested? What's different? You don't hear a lot of many companies doing gold exploration or development in New Brunswick. New Brunswick's famous for big, massive sulfide deposits. Noranda operated there, and ultimately Glencore had one of the world's largest mines, several of them operating there, and that's what it's known for. But more recently, we became aware of gold being found by prospectors in a place where my peers in the geological world, the expert, oh, don't go look in the Maritimes. Oh, there won't be gold there. Oh, a little bit of this, a little bit of that. Not everything. That's not true, and we know that's not true now. This map speaks to some very simple geology. It should be very, very simple. Most people know about continental drift and tectonic plates, and how the continents float around over billions and millions of years and collide and break apart and split apart like ice flows in the St. Lawrence River or your favorite lake. And that's what happened. So 400 million years ago, in brown and the brown and orange colors, which would be Africa and Europe, collided with the blue and green colors, which was Greenland and North America. And where they collided, they squeezed rocks in between. It's called a suture line. That speaks for itself. That was previously an ocean, the Iapetus Ocean, squeezed together, and now it's a suture line, tight line of squeezed up rocks. And all along that, where that happened, gold deposits. Subsequent to this, the continents broke apart around the North Atlantic Ridge, and now we've got the British Isles moving away about an inch a year from Newfoundland and the East Coast. But everywhere you look along that line, you'll find gold, and more all the time, particularly in New Brunswick. Some examples of the big ones are Dalradian in Ireland. It's a recently new deposit. I shouldn't say newly discovered deposit that's been and working towards production. Very, very high grade. Same kind of thing you're finding at Newfound Gold. Maritime Gold's busy. Anaconda's been there a long time. Hope Brook's a former producer. St. Barbara bought Atlantic Gold for $500 million a few years back in Nova Scotia, where people would say, don't go look there. And in fact, Nova Scotia is the earliest gold mining in North America. So there's a history of gold here. You follow that line down, you'll find gold in the Virginias. People looking there, there's lots of gold that was mined along that belt in the pre-Civil War era. And then finally, Oceana Gold, a world-class company, is mining, based out of New Zealand, is mining the Hale and Ridgeway deposits in the Carolinas. So what's happening here up in northern New Brunswick? You see a bend or a flexure at the top of that suture line. We picked up a property from prospectors a couple of years ago that had some gold in trenches. It looked pretty interesting to me. I went out and said, well, this is different and very good values. Kind of rocks I'm used to seeing, the same rocks I would see again in the Abitibi, just different age, same kind of processes. Subsequent to that, Puma exploration picked up Williams Brook beside us. They got a very good result. And go to the next slide in more detail. Here's the property in more detail. Our property is the blue and purple. And all those dots and stars are pretty much the results of soil sampling work and some drill holes and float samples, early stage exploration. Puma picked up the property all in brown. They're kind of like the donut, and we're the timbit in the center, or the donut hole. Puma's done a lot more work, very advanced. They have this one project, a couple of other smaller ones, but this is their main project, their flagship, and they're working on it hard. For us, this is our secondary project. We have our Yukon one as our third, but we're earlier stage than they are. They've done a lot of work, and they published in 2021 a first drill hole, 5.5 grams over 50 meters, and they have grab samples up to 371 grams, 241 grams, 191 grams, and we're looking at the property on the far left here. Those are very exciting results, and that's the market. I'm going to tell you why if you're listening today, and why it's a good opportunity. Follow Puma, follow us, but these guys got punished. They got downgraded 17%. They got shorted 17% on publishing a brand new discovery, results very much similar to Newfound Gold, and the market's beating up on them. And it's not because the market's vindictive. At that time, the market was just selling on any kind of news at all, just to buy into something else. So people weren't really paying attention to what was going on here. Now, more recently, in the last couple of months, in that green outline, that's Gold Terra has just picked up the Mulligan property, 3.5 grams over 60 meters, brand new discovery up there. This is exciting in the area as well. On the other side of us, on the other side of the purple, you see Puma's got more results and all the results there. A gap of white, and the far right, at the top, there's Canadian Metals. That's a little junior that just listed in the last couple of months on the CSE. They're prospectors, and they made some new discoveries. 455 grams per ton, 85. You read the numbers. Very high grade values, and nobody knows this. The market hasn't picked up on this. The media hasn't picked up on this. This is a district scale. That whole extent of property from one end to the other is 47 kilometers. And everywhere people look, they're finding gold. That white gap in the middle has been picked up by prospectors, and nobody else is doing any work in there. There may be discoveries being made in there now. I don't know. We'll find out next spring or when people are working on it. But that's tremendous. That as far as you look and everywhere you poke around, you're going to find some gold, and a lot of it is being found on surface, not even drilled for yet. So that's to me another fairly astonishing thing. We're continuing to work on it. We'll see what happens. But for this one, we're in that light purple area. It's a new acquisition you picked up this year, that big block of ground. We just finished soil sampling in there. We should be publishing some results on that in the next month or so, of the results of that. Still waiting to get assays on that, and we should be seeing some news on that. But the idea here is that let's see if we can fill in all this information where the gaps are and find more of these stars and dots on here and put it together. And we're hoping by next year to have some targets ready for trenching and drilling. Oh, by the way, a little note at the bottom here in brown, at the very bottom on the left side. We also hit samples on subcrop, which is just above the surface of the rock under the soil, a 4.4% copper and 0.05% copper. So we've also found we've got copper as well as gold in this area. All new information. And finally, we've got our project in the Yukon. This is the one I said is comparable. If you've heard of Snowline, they're a darling of the over the counter. They're located just above us. And again, the marker isn't working for me, but it's just above where the Yukon gold belt is. That Tombstone gold belt is very prolific. It actually extends into Alaska. Some Whopper deposits, Fort Knox, are on Alaska. It's the same belt that runs through here. You see Eagle, Dublin Gulch. That's Victoria gold. It's a big multi-million ounce deposit in production. Very big for the Yukon. We're in that same belt. You see where we're located, just on the Northwest Territories Yukon border. We're in an area that's very close to Seabridge Gold. Seabridge owns the Three Aces property. They acquired it about a year and a half ago. That was a 5,401 gram per ton gold discovery in 2003. It wasn't a random grab. There was a knot of gold sitting on surface that they bulk sampled for a number of years. And the former owner of Golden Predator actually opened up a mint, believe it or not, in Watson Lake. You can see where that is, just close to the BC border, just south of us, where they were actually minting coins out of it. And subsequent to that, Seabridge picked it off. Seabridge is a $1 billion market cap company, a very serious company. They're right beside us. They're about 25 kilometers or so next to us on a parallel structure. We focused on a lot of work, about a kilometer. So I'm going to point to that diagram on the left. And there's a little box where it says Golden Culvert Original Discovery. There's a little 1 kilometer square box we worked on. We did some diamond drilling. We got up to 20 to 79 parts per million gold soil anomaly in it. Surface samples up to 320 grams per ton gold. We put in about 25 drill holes and 24 trenches. It's got a 3 kilometer strike and 75 meters average width of this zone of float samples. There's about 90 some odd samples that average about 16 grams per ton. We only knew about that one little area. We knew that soil sampling works. Last year, we soil sampled the rest of the property. That entire property is 24 kilometers long. We only looked at a kilometer, similar to the California story, same thing. We got a lot of property to cover. A year ago, we surface sampled it all, and we've got soil anomalies. Those are highlighted in green, and they're very much the same as the main zone. We've just got on the property to follow up on those this season to see if we're going to get similar results. And we've yet to publish results on that. We're still working on putting that package together, but we did find some things that look very similar to the main zone. So again, this is early stage exploration. It could take a long time to get a mine or reserve or whatever out of this. It could take a lot of time, a lot of money. For the Yukon in the north, we have a highway right through the property. It's a gravel highway. You can drive right up to it, but a lot of the costs are cheaper than they might be, say, in the Ring of Fire, other places where people are looking, or northern Quebec or northern Ontario. It's still reasonably inexpensive to get up here and work. However, it could take a long time. And our plan for the company is to move to production and finance our exploration projects with our own money. So this slide is where I'm going to probably end it, or close to it anyway. It shows our market capital structure. we had zero debt. I'm going to point to the line to the very bottom, next to the bottom on that table on the left, where we have debt of 3.9 million. Yep, we had zero debt. We acquired roughly, in the end of the day, nearly 3 million ounces. We acquired California Gold by a share exchange completely, no cash. That was 65 million shares we issued to acquire California Gold and the Fremont Property 100%. So that equated to about $9.36 an ounce is what we acquired. That was then for nearly 1 million ounces. We can say that we're actually $2 acquisition per ounce if you look in hindsight, given where we ended up. We also acquired debt with it, and that's the reason it was unloved. That company was unloved because it had acquired a considerable amount of debt. The company was struggling at the time to keep its project going, and they decided to get into the hemp business, and that failed. And they're left with debt, and they're on the auction block, and we picked it off. So we did acquire some debt. We can service that debt. That debt is actually owned by, on the very bottom line on the slide, it's owned by two groups. One is Ronsman Investment Bank that we've already renegotiated with them, and they and the other debt holder, R.W. Thompson, Ron Tomlinson. Ron Tomlinson is actually a director of Stratabound. He came on board with us, and I would say that both of those contributed and were on board with Stratabound picking up the company because they wanted to see this project go towards production and to be developed and see value get into the company that way. And certainly not in the hemp business. So they're friendly holders of the debt notes, and that's we can manage that debt carrying forward. And we were aware of that, and it was a risk we're happy to take on in the beginning. But I wanted to make sure that people understood there's debt, and that may be seen on the outset as a negative or a liability, and it is certainly is a liability, but it's not as bad as you think because the people that hold it are actually partners working with us. I'm pretty much done my talk. We raised about $2 million a year ago. We just announced yesterday that we're raising another $2 million. I don't like raising money at 5 cents or 4 cents. 5 cents is what we're doing. I don't really want to do that, but we had a compelling reason to. One of our major shareholders offered it, and we said, let's go. We want to get going. We got to keep the project and the company going forward. So that's what we've done. I'm pretty much done, Tim, and I'll hand it over to you if there's any questions.
Great. Thank you, Kim, for a very informative presentation. We'll now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. We do already have a couple of questions. First, you had mentioned the permitting process in California. Can you tell us a little more about what the mine permitting process is and what are you permitted for currently?
I'll answer the second part first. We are not permitted for anything right now, but the way it works in California to exploration and do drilling and that kind of work, which we do plan on doing, it works a lot like a building permit would be in Canada. In Canada, you got patented land. You go do what you want. You don't have to get permission to do too much, or you do a little bit. But it's more. This works a little differently. So, for an exploration program, we go to the county. We say we want to do X amount of diamond drilling or trenching. That anything that disturbs the land, and usually it might be a couple of weeks to a month or two to get the approval for that. So it's fairly straightforward, and it's prescribed, and there's nothing too difficult. We had one when we acquired the company. We did some trenching. We completed it. We closed it out. We tidied up, and that was important. We did that right away. It expired last April, and we said because we wanted to demonstrate to everybody that we do clean up. We're responsible, and that's the message. That's who we are anyway. And you don't get a social license to operate that. So that's the second part of your question. The first part, the process is there's a couple of organizations, California organizations. CEQA is one of them, and SMARA. SMARA is basically Surface Mining and Reclamation Act is acronym for SMARA, and that regulates surface mining. So the open pit we're looking at, and that the regs are there, but again, the regs who fronts the whole process, who you go to and ultimately get the approval from is the county. So we will be following all those regs of what you've got to do. In California, it's required to backfill your open pit when you're done. And that's fine. We factored in the cost of that of doing it in our work, in our own economic analysis. We factored that all in. So that's pretty much it. I mean, there's all kinds of other folks you go to. You're going to have to go to the California Wildlife Service and a variety of others and get their blessings and so on. But one thing I do like is it is, we try to get this done in Canada, one window. And I won't say it's entirely one window in California, but am I comparable to what I've seen in Canada? This is much more because the county's running it, and they'll run interference for all these things that make sure that it goes through the right process. When you're dealing with the county, you're actually dealing with people that have a stake in it. If you're in a county that doesn't want you there, we wouldn't be there. If we felt, and we have been down on the ground, we know that it's as much as a public relations issue working with people locally. We know that mines bring lots of, mining has got one of the highest paid trades you'll ever find. And there's always the lure of money. We also, but the fear everybody's got is what, irresponsible mining companies, they can leave a mess behind. Well, we certainly don't do that very much. And mining industry is bent over backwards to try and show how it doesn't and won't do that. And still that kind of persists in some people's minds, and we're working hard against that. But it really works a lot better if you're dealing with local people and explaining it to them and showing what can happen. It isn't just about the money. As I said, at the end of the day, the mine's finished. Why not leave something behind that has greater value than you started with? Never mind the gold in the ground. And again, if you can leave a reservoir of water there for them that they can use locally, and California, the governor, just escaped, I don't know his name like the back of my hand, they just announced a giant budget to try and to hold on to water in California. If that means plugging up rivers, that's not very good. I would think, again, you're destroying habitat, and mines make excellent reservoirs. That's just one of the things we can do with that. There's great things you can do with mining equipment and contour the land and make it a beautiful thing to look at the end of the day.
Great. And also looking forward, what are the major steps needed now to bring Fremont into production?
Well, one is permitting, and we know that what we jumped on it right away is that we need 2 years of baseline environmental data. What that means is you got to do water sampling every quarter. You have to have studies done that consultants will come in and look at animals and bugs and a variety of sensitive plants and whatnot, and establish what that is like before you get started. Because the idea is that we're going to want to restore that back or not harm anything. And that's standard anywhere now. That's been going on in Canada and everywhere for 40 years or 30 or 40 years. It's nothing new here. It's the same there as anywhere. So that's minimum 2 years. We're lucky to have a draft permit that was ready to be submitted in the late 80s to work with and update. And it already found and looked into some of the things that might be an issue. And by and large, there aren't very many things that would be any issue anywhere. So the process would be we pull that together and provide it, send it in. At the same time, we want to work with the local people, engage in what we're doing, let them know so there's no surprises and they're aware of what to expect. So that's the one thing. The second thing we're working on is our preliminary economic assessment. And we're looking at things, what is the mine going to look like? The two things are together. We're going to be providing what's called a project description. It shows the local people, what is this project going to look like? But at the same time, we need to know it from an economic standpoint, from a mining, from an investment standpoint, what needs to be done. Where's the waste rock going to go? Are there roads going to need to be moved? What's that going to cost? What's the impact? What are the impacts? And all cost that all in. So that work is being done at the same time as well. So those are the steps. I would say we see that the PEA is out in early next year, next month, I hope, for sure, and we'll know what that looks like. And at the same time, we're engaging. We're actually out there talking to influential people in the community already. We've hired a PR person. We've got 3 California environmental consultants working with us. We've covered all the bases, and the PR person's worked with mining companies, any industrial company, and even politicians. So we've got, that's one thing you don't normally do in Canada is hire a PR person with that kind of skill sets, but we figured that's very important to get us going. Hope that answers. There's lots of details. I'm not going to get into them all, but basically those are the couple of things we need to do to get moving. Most companies will wait a bit. They'll do more drilling, do some exploration, but we know that, why wait? Let's get going right away. Plan again is let's build this mining operation, and if we get it right, well, then we'll be invited to do it again somewhere else.
Great. And thinking ahead, kind of big strategy picture, what is the long-term strategy for the company? Do you want to become a producer, or would you look to potentially partner or sell with the project as it's brought forward in development?
Yeah, that was the last slide I didn't put in there, but we're looking at we're jumping to the question. We see permitting application going in 2 years, and I will answer your question. And then a year or two of getting set up and funding and then building. And so 4 or 5 years in production. And that's a reasonable expectation in California. I don't think it's reasonable to expect that anywhere in Canada. It'll be 15 or 20 years now to get something off the ground and going similarly. But that's our plan. And we see that opportunity in California where other people, I said, would be frightened to go. I think it's actually a pretty good place to go. But to answer your question more directly, any of those things works. We like, this is the part of my career I've loved the most at this stage of the mining cycle. This part where we actually got a really meaty deposit and working through all the little challenges and the things and the solutions you're going to have to make this an effective and efficient, get a permit, get acceptance, all those things. That's the part I like the most. You can tell the way I rattle on and talk. I'm probably kind of like this part and I quite do it the most. I've been in operations. I've been a mine manager. I've operated for companies like Rio Tinto. I was a mine manager there as a geologist, a little unusual, but do have that experience. And that's fine. That's for people who it's good and exciting, but that's, to me, that what the effort there is all about smooth, easy going, keep it efficient. And the part I like is always the challenge of climbing the mountain. So for me, I'm enjoying it right now. I wandered off your topic, but I guess what to say is we're happy building a mining company. As I said, springboard, do it here. We'll do it again, do it again, do it again. Peter Monks of the world built major mining houses with no background experience or technical experience. Imagine what people can do with the experience. So that can be done. If we get part way into that, that'd be a great fun thing to do. If somebody comes in and decides to take it out, all right, that's good for shareholders. I'm happy with that too. And maybe we stay on, or maybe we just go out and do it again somewhere else. So to me, all these things work. To me, it's being in the game, whatever it can be for me personally. And I think that's the kind of people that have gravitated towards this company that we're working with. They're all the same. We just love doing this, and gets us out of the bed in the morning. So any of these opportunities can be there. All of them, by the way. I like to say, we're going into California, there's a tremendous amount of wealth sitting under that property. A lot of it. It's locked up. 3 million ounces out of a kilometer 4. There's a lot there. There's a lot more gold, wealth and gold underneath Mariposa County. And there's one whopping pile amount, well over that, if you take that Mother Lode gold belt. And the only other people out there working it are Equinox, and they're operating down the very south end. and Rise Gold. And there's another company to watch. Rise Gold is actually doing a great public relations job, I see. And they've got an underground operation, the old Idaho, Maryland, in the northern part of the belt. And they seem to be plugging along and getting acceptance and doing all the right things. Look at their website, look what they've done, and see the feedback. It reads more like a newspaper article, but the truth is they're actually succeeding. So again, we see that opportunity to build something in California. There's a lot of wealth there to be unlocked, taxes to be paid for the California state, for the federal, and then property taxes and things, and jobs for people in California. I have to stop myself. I can go on for hours sometimes talking like this. And you should, when you hear too much, Tim, just put your hand up and say, okay, okay, great. Carry on. Anyway, anything else?
No, that's great. Definitely interesting. And one other question here, and I think this is both for California, but also looking at the projects in Canada. What are relations like with the local community? And then looking at Canada, do you have good relations, and are there agreements with First Nations groups?
We don't have any agreements with First Nations in Canada. It's very early stage, but we have been in connection with, particularly in New Brunswick. I like New Brunswick and the Yukon for a couple of things. We know we've got the duty to consult in Canada, and that duty lies with the Crown. And in some jurisdictions, the Crown, represented by the province, and I'm going to be political on it, have run from the responsibilities and left it to the proponents and the business people. In that regard, I've got a previous company I worked for was a Little Nickel Junior, and we actually got an award from the First Nations Treaty 3 in Northwestern Ontario for good business practices. So, that I don't like bragging about myself too much, but I have to say that was something that is important for anybody to talk about if you're going to run a company, an exploration company. The exploration companies, forestry companies, we're at the pointy edge of the stick when it comes to working with Indigenous people. And I don't mean that. Pointy edge is probably the worst way to put it. That's not true, because what we found both in Northwestern Ontario and in New Brunswick, when we talked with them and worked with them, that if you're in an area like anywhere else where they're progressive and they want to see development and they want to work with you and they just want to be treated with respect, that works anywhere. And that's what you got to do. We haven't done as much as we might in the Yukon. The Yukon has done, as far as I'm concerned, the New Brunswick government, the Yukon government have done a great job acting on their duty to consult. And they will do, when you submit permits, which are very early stage exploration, they'll go out and do that acknowledgement. We do issue letters and so on, but the work we've done is so low level and not, it's so early stage. There's not a lot there to discuss in terms of an impacts benefit agreement. We're not near that yet. In the States, I want to get out there. We're in an area that's not very close to any Native Americans, as they prefer to use the term. We say Indigenous or Aboriginal up here, but we aren't that close to them. Desperately want to engage with them. I think they're good to work with, but we're following the lead of our guidance down there. We will get to them. We're still working with in that area, still working to find out what we're going to do and how we're going to do it. That anywhere you go, whether it's Aboriginal first people on this continent versus the ones that came in later, you've got to go in there and build expectations that are real, and that goes both sides, positive, like all the jobs and all the good parts, and then again allay all the concerns that might be off out of context and not real. So that kind of stuff our team is actually quite good at, and we are working on it, but we're working on it from the ground up.
Great. Well, I think that's all the questions we have for today. I'd like to again thank Kim Tyler from Stratabound for presenting today, and thank you everyone on the line for tuning in. Yes, absolutely. Just a reminder that Red Cloud Securities will be back tomorrow morning when we present Strathmore plus Uranium Corp. Friday, December 16th at 11 a.m. Eastern Time. Have a great rest of your day.
Thanks, Tim. Thanks, everybody. Have a good day. Bye-bye.